So the other day, my accountant called and said, "Hey, Luna, you're about to hand the government your biggest tip of the year." And I said, "What do you mean, tip? I didn't even get good service." That's when it hit me. Most people wait until April to do taxes. The wealthy do it in December when it actually counts. I'm Luna, your personal wealth designer for My Lunatics, and today I'm breaking down 3 tax secrets the wealthy use before December 31st to keep their money compounding, while the rest of us are Googling why our refund got smaller this year. You ready? Let's make the IRS regret underestimating you. Secret number 1, the Augusta Rule. This one is the billionaire's holiday card to themselves. You can rent your home to your business for 14 days a year, and the income is completely tax-free. Here's how it works. Let's say you own a small business, an LLC, or a side hustle. You host quarterly strategy meetings at your house. You charge your business a fair market rate, say $1,000 a day. Your business writes off $14,000 as an expense. You personally receive $14,000 tax-free. The IRS gets nothing. No W-2, no 1099, no problem. It's literally written into the tax code under Section 280AG. Why the wealthy love it? They rent out their vacation homes, their primary homes, even their lake houses, to their own companies. It's how they extract money legally, invisibly, and repeatedly. What you can do: set up your LLC, document your meeting minutes, save screenshots, agendas, and proof of business intent. It's not shady, it's sophisticated. Because the rich don't hide money, they redirect it. Secret number 2, the December vehicle loophole. If you've ever wondered why rich people suddenly buy SUVs in December, this is why. If your business buys a vehicle over £6,000 and uses it 100% for business, you can write off the entire purchase price in the same year thanks to Section 179 depreciation. So if you buy a $150,000 G-Wagon before December 31st and it's registered to your business, you can potentially deduct all $150,000 from your taxable income. Yes, legally. Why timing matters? Buy it on December 25th, and you only need to prove business use for the rest of the year, which means you can drive your write-off into the new year with a clean logbook. Here's how to do it right. Make sure the car is in your business's name, keep mileage logs, yes, even screenshots work. Save your bill of sale and insurance docs under the company. The wealthy do this because they play with the rules the way they were written, not the way they were taught in school. And no, you don't have to buy a G-Wagon. A heavy SUV, truck, or van qualifies too. You just need to look at the curb weight, not your ego. Secret number 3, the foundation funnel. This one's a game changer. When wealthy people want to lower taxes and look good doing it, they don't just donate, they control their donations. They do it through something called a private family foundation or a donor-advised fund. Here's what it means. You can donate up to 30% of your income to your foundation or DAF. You get an immediate tax deduction, but you only have to give away 5% per year. So if you donate $100,000, you can keep $95,000 invested and compounding tax-free inside your foundation indefinitely. That's how wealthy families fund scholarships, nonprofits, and legacies while their donation money keeps growing. Your move? Set up a donor-advised fund on Fidelity Charitable or Schwab Charitable. You can start with as little as $5,000. If you're higher income, create a private family foundation through your CPA. Donate appreciated stock instead of cash, so you skip capital gains and still get the deduction. This is how billionaires turn generosity into generational tax shields. So let's recap. 1, rent your home to your business tax-free. 2, buy your business vehicle before December 31st and get the full write-off. 3, fund your foundation to get the deduction and the control. Want to know the ironic part? These aren't hacks. They're the same IRS rules everyone has access to. Most people just never learned how to read them right. The middle class waits for refunds. The wealthy plan for deductions. And if you want to start designing your own wealth, start thinking like the designer, not the client. Well, there you have it. I'm Luna, your personal wealth designer for My Lunatics. Wealth isn't built overnight, but it can be designed every day. Subscribe if you want better money episodes in your feed. Be sure to watch out for my next episode, how I raised my credit score 100 points in 30 days. And turn on notifications so you're here when my new series for high-income men and women drops. Your future self will be very annoyed if you miss it. See you real soon.